Welcome back to Real Estate Live, where your questions get answered. We get to the point with the hot topics that everyone is talking about twice a week on YouTube and Facebook at 9 a.m. Pacific. Today's hot topic is all about online lenders versus local lenders. Now, all of us that have either been looking for a refinance or purchasing a home will oftentimes see rates that look really, really sexy. And then when you get into the mortgage application process, you realize, hey, why are they asking for so much information? And why is my rate not the same? And it's one of those things that we got to get some clarity on, and we got to get to the bottom of this and get to the truth. So that help us get to that truth is Bill Merren with New American Funding. Bill's going to share that with us. We're going to give you some on-screen pop-ups so you can see what it really looks like, and we can help you make sense of this when it comes time for you to buy your house or get a refinance rate. And Bill will, of course, be giving us the mortgage rates for today. So let's go ahead and bring Bill up, and let's get after it. Bill, good morning.
Good morning, Andrew. What's going on, buddy?
Hey, thank you so much for joining in today. So I know that this is a really interesting topic, and it's something that comes up a lot whenever I chat with people. And, you know, we need to do another one of these perhaps in a week or two about the differences between a loan pre-qualification letter versus a loan pre-approval letter, because obviously there's a big difference between those things. But for today's point, let's drill down with what we got going on in the mortgage rates before we jump into today's hot topic, please.
Yeah, so Andrews, I know you and I have talked a lot about this, but the stock market is rebounding beautifully right now. It's going really well, which typically does not mean great things for interest rates. But however, you know, the mortgage rates did start off this morning, took a little bit of a hit where it was not that positive. But as of right now, what time is it? As of, 9 o'clock, the rates are in the positive now. So it does look like interest rates will continue to improve. Potentially, we are recommending anybody that's currently, in contract, closing in less than 30 days. It's a great time to lock. If you are looking at a refinance, being recommended to carefully float. And carefully float means if we get an alert to lock, we're just going to probably lock it without even talking to the clients, just because the market can take a sharp turn for the negative. But right now, it's actually looking really good. There's some great data coming out this week in regards to mortgage applications, something we've been tracking, something that we see. I know you and I've talked about this, and I think even Celeste talked about this maybe last Friday. But mortgage applications, it's great, man. It's really cool to see, kind of relatively post-COVID, if you will, the application rate is really beginning to skyrocket. You see this trend of the applications just beginning to just continue to increase, continue to go up. The outlook on the housing market is positive. And a lot of the younger buyers, because the younger buyers right now are making up a big part of the market, especially for first-time buyers and all that, the applications have really spiked in the last 2 weeks, which is great to see.
It is. With more applications means more qualified home buyers that are entering the market. And it was pretty interesting this past week. And I was hustling around, and it's amazing my eye is open right now, but some long days and long nights. But, the point is that I was working with multiple families and working on submitting offers. And in one case, new construction. And in the new construction community, it was insane. I mean, just the amount of people going in and out. And it was also an interesting observation, just more of a housing market / mortgage market, I guess, type update here, is the builders are operating and behaving very differently as far as their showing conditions. The builder like D.R. Horton, really wonderful builder, very easy to go look at it. Their new home agents were on site. Obviously, we wear our masks and stuff to protect our consumer and our clients and each other. But then, like other builders, I noticed that when we were looking at some different places, they were mandating it was, I forget what exactly they call it, but essentially I had to submit an online request to view the property because there's no new home agent on site, right? And I was like, how do I know if I'm out here showing like all these different communities that I'm going to be able to be there exactly at that time to access it? And part of that frustration, and I thought it was kind of sneaky of the builder, to be honest with you, was I had to submit my driver's license. I had to do a front and back side of my driver's license to get the information, to get the access code to the property. And then I thought, that's kind of sneaky and one heck of a way to void out agent representation. If a client, a consumer that has an agent or wants to go in there with an agent said, hey, you know what, I want to go check this out. And then they're over here just trying to figure this out. And then they're doing this thing, and then they do that thing, and now the builder has their information, and they're like, "Oh, so sorry, Andrew, your client came without you and registered before you." Like, what? I mean, I really think the builder's got to get over some of those practices because I find them highly deceitful and inappropriate. But for the most part, I've been blessed and fortunate that most builders that I've worked with clients have been pretty cool people. And it's just a little bit of an interesting observation with the housing market as it pertains to new construction in specific. So I was kind of going down that rabbit hole, but let me pull back out.
Yeah, well, I was going to say too, man, most home builders don't do that. You know, most home builders are, or at least in here in Vegas, I don't know about around the country, but at least here in Vegas and Reno area, are pretty dang good about, you know, honoring that agent buyer relationship, but the buyer's got to disclose that, you know. But it's going to be interesting, man, for the home builders right now, because there were so many, just me personally, I mean, not even really working a ton of new construction this year, but just with what I was working, had 7 different cancellations within a 2-week time period. Some of them the buyers didn't even know about. Some of them obviously the buyers had to cancel. Which is interesting because there's a lot of that went on. And then now, as you know, I mean, there's some great deals that people can get with new construction compared to resale if it makes sense for the buyer. So yeah, but a good point, man.
Well, when we're talking about mortgage market updates and housing market updates, that is a very keen observation. And I'm glad that you raised it, Bill, because the truth is, and it's still going back to my housing market predictions for 2020, it's bearing itself out despite COVID, that the real housing crisis isn't one that's going to collapse upon itself, but the real housing crisis is one of a lack of available, affordable homes for sale. And the reason I say that is one of the families that I was representing this last weekend and helping them get into their contract, the reason they decided to go new construction was by sheer availability of what homes options were available to them, and what did those homes look like. And if they could buy a home at $350,000 of a new construction, and that was pretty much their out the door price, because we know like builders like DR Horton and Lennar here in Vegas, pretty much what you see is what you can expect to get, which is pretty cool. But then $350,000 on the resale side may not be so sexy because maybe it's not as upgraded. Maybe they have the carpet, maybe they got the wrong color palette. So, I mean, it's a really interesting conundrum that a home buyer finds themselves in. Do they go new and pay a little bit more of a premium and different rates, or do they go resell and try to make it work, right? So that's the real housing crisis. And that's what we got to gain clarity on and be real about and figure out how best to help people in addition to just recognizing the market. Now, speaking of the market as it pertains to mortgages, other than getting ready to get into our hot topic, because this is one that I'm excited to get into, but what mortgage market update do you have going into this week that a home buyer or somebody that wants to do a refinance should know? Have there been any major changes lately to the rules?
Yeah, the guidelines have, you know, at least the New American Funding where I currently work is you know, the guidelines have relatively loosened back up. We are allowing a lot of things that maybe we didn't allow like a month, 2 months ago. But it is a great time. And one thing I was going to hit down on, Andrew, whether somebody's looking at refinancing or buying, especially when it comes to buying, because if you're refinancing, hey man, great time to lock your rate, great time to maybe pay off some debt, lower the payment, whatever it is that you want to do. But you're already in the home, right? The urgent thing is buyers that are kind of on the fence of buying, that are currently qualified to buy, they're trying to hold out because they think the market's going to crash. They think the rates are going to get much better. I think you might be shooting yourself in the foot 6 months, a year from now, when we're kind of post COVID, we're post election, we're post all this stuff that's going on. All of a sudden, boom, you'll be like, dang, man, I wish I would have bought that. So I would just urge anybody watching this, if you are qualified, you're wondering if you are qualified to buy a home, or refinance, but specifically when it comes to buying a home, please don't hesitate. Reach out to your preferred lender. Reach out to myself as a mortgage lender. I can get you pre-approved anywhere across the country to buy a home. Connect with Andrew to get you out there looking for a home. But you want to know if you do qualify, and if you do, what are the rates now for your current scenario, and does it make sense to buy now? Because if you wait, you know, even if you got a great credit score that, you know, lower than 3% rate in 6 months to a year from now, is probably going to be gone. So you might not be able to qualify. Yeah.
That's a great point, and I'm glad that you brought it up because, you know, and frankly, you know, I just a little bit country, and then I got my Marine Corps ways. But the way that I look at this is whenever you're timing the market, you can't buy based upon the market. The best time to buy or sell a home, refinance a home, are for the reasons that are important to you in your life for that time that you're looking. Because the one thing that always changes is the market. It goes up, it goes down, it goes all around. It's best not to chase it. It's best to plant your foot down and make the decision that's right for you, make a well-informed decision because of the timing is right for you in your life. Because going back to being a little bit country and Marine Corps-ish, right? It's almost like would your future self kick your own ass if you were to look back a year into the future. I mean, it's worth considering because right now we are at truly historic rates that are extremely low, right? We know this. We know that housing market is actually pretty stable, and we've given so many different live streams, so much different education to help people understand the reason that the foreclosures aren't coming, right? And the reason that the market is not crashing. And even if you had a second wave of COVID, it would still be true, because you have all of these homeowners out there. And Celeste does a great job. As you know, she dives into her numbers, very analytical, and she dives into the numbers like, Andrew, so there's 124 million estimated homes across the United States. And of those numbers, approximately 37% of those own those homes free and clear. And of the people that have a mortgage, approximately 43% have $177,000 of home equity in those homes. So when you start breaking out the math, and then she's like, oh, of the 124 million, by the way, 40 million of them are used as rental properties. So then you say 80 million people that would potentially be homeowners like you, me, everyone else that owns a home, right? A normal primary owner. And you start breaking down that math, the numbers are not there to crush the market. It's just not there. So I think that's worth it. And that's why I said, quite frankly, on the onset, hey, country boy, Marine Corps ways, would you kick your own ass looking back at yourself 12 months into the future? If your future self says, yeah, I'm going to whoop your ass, then, hey, you should probably really get off the fence and decide if it's right or not. And if it is right or not, then ultimately do what you feel is right and just do an application. Don't be afraid of the application. Just do one and then make a decision that you feel comfortable with after discussing it with a loan officer like Bill Merren, or your loan officer of choice that you have around the country. That's really what it comes down to. But Bill, let us get into the fun of online lenders versus local lenders. And let's lead this one in with what everybody sees. The truth about advertised rate. The devil truly is in the details. So let me go to a screen share here and show this. So we got some very sexy rates here out by Quicken Loans. And I'm not picking on these entities whatsoever, because we're going to pick on New American Funding too, as we talked about. So, when we see these marketing rates and it's all so sexy and you're like, oh, 30-year at 2.9, that's amazing. Oh, I could get a 10-year at 2.6 or a 30-year fixed at 3.25. These are all smoking low rates that are really amazing. But the problem is that we then have to click this little thing down here that says, see the disclaimer. Right? So I went ahead and did that and popped it up right here. And this is where the devil's in the details, people. And this is what we got to gain clarity and insight and be realistic about. So for their 30-year fixed rate mortgage that they're showing right here at 3.25, right? They're saying that to see their assumption that the payment is based on a $200,000 30-year fixed rate loan at 3.25% with $870.42 for the cost of 2 points. In other words, you did a rate buy down. Due at the closing and a loan to value, this is the kicker, people, a loan to value ratio of 74.91%. To help you make sense of what a loan to value ratio is, this is assuming you're putting down 20.09% of a down payment onto a property. And
then 25. Sorry, Andrew.
Thank you. Yeah, my math was off. You're right. 25.09% of a payment. So if you looked at 25% just for easy math of this, well, we're going to come up with a nice little $50,000 down payment, right? So then it is also really cool because it says 1 point is equal to 1% of your loan amount. And the payment that they're showing does not include property taxes or insurance. The actual payment amount will be greater. So the devil's in the details. And that's why we really wanted to drill down on this and make it clear, because you see this stuff. And then how many times do you talk to somebody on your side of the house, Bill, where they're like, hey, I saw this rate, I could get like 2.5% on Quicken, 2.625%, and they're not even paying attention to the type of loan or anything else up here. And they're like, well, I want that. If you can't do that, I need a different lender.
Dude, it happens all the time, man. Would you click back on that real quick? I wanted to show everybody something. And this is something Andrew just kind of breezed over. I want to make sure you guys see this and understand what this is. If you look up there where it says 2 points, where it says for the cost of 2 points, that's 2% of your loan amount, meaning you're going to pay up to 2 discount points. Man, it can make sense. If your payment's going to drop drastically by paying those 2 points, that's great. But again, it's the sexy online marketing that all mortgage companies are using out there, and they're assuming you're putting 2 points down, sometimes doing an arm, all these different kind of crazy things. But those 2 points are huge because every lender can do that. Every loan officer you talk to can do 2 discount points, or just not advertising it, because most people don't actually choose to do that because it's the cost doesn't make sense in most cases. So super important to understand what that is.
I'm glad that you raised that up. And just to show that, like I said, I'm not picking on any one lender. I'm just picking on the practice of what I consider deceptive rates, as opposed to just saying, hey, best thing to do is to apply and see where you stand, because ultimately it's going to be dependent upon your FICO score is going to help you get the best of the rates depending on where you're at. And then it's going to be your debt to income ratio that is how much you can actually get approved for. So with your monthly income versus your monthly debt. And I think that's really important, because sometimes I talk to people and they're like, Andrew, I'm pretty sure I won't have a problem getting approved for a $500,000 property because I have a credit score of 740. I'm like, so your credit score doesn't have anything to do with the amount of home that you get approved for, but your credit score rocks and good for you. You'll get the best of the interest rates that are available to you, provided that your debt to income ratios check out. So, and they're a little bit surprised. But here we go back to the point with the mortgage rates. Lending Tree's putting out the mortgage rate trends. They're showing you here how everything breaks down. And then I do like the fact that they at least let you adjust this with your credit scores. So you could go and see what they are based upon different rankings. So that's pretty cool. But then again, we see this really sexy stuff, and our human nature is going to be, we want the best deal. So not even paying attention to a 30-year, 15-year, 5-to-1, people are going to see this 2.7, right? And they're like, oh my God, I want that. But then we got to go back to that nice little thing called disclosures. So here's their disclosure number 22 about their $500,000 home loan, right? And that it was current as of the 10th of June, that the advertised loan rate is for a 5-to-1 adjustable rate mortgage with a 30-year fully amortizing term from actual offers posted to consumers by network lenders. The initial interest is 2.25% for 60 months, 5 years, 60 months. And the disclosed APR is on 0.5 discount points. In other words, you're buying down the rate again. And then when you start looking at this down here, and I like it a little bit better, I saw it earlier. One of them actually said you had to have a credit score of like 740 to get it. So that's what I keep looking at, because there it is, 720. So disclosure assumption that you have at least a FICO score of 720 and a loan to value ratio of 80%. So in this case, at least a 20% down payment. Now, that's what's really, this is where we get real, and this is where we get deep. And that's the purpose of this channel, is to help you make sense of real estate. And the purpose of the live streams and having, you know, a wonderful top-notch loan officer like Bill Merren on with us is to help you really make sense of what this is. Because if you don't gain clarity and insight, and if you don't think this through more than the chicken dinner that you're about to go eat because you Googled that, but you don't want to Google hundreds of thousands of dollars and actually learn about this thing called a home, then this is where we see consumers getting in trouble. And that's where I like to try to bring everything full bear. Because when you say, well, I didn't know this, there's all these hidden costs, there's all this hidden whatever. Well, my friend, with over 674 videos on my channel, from live stream and recorded content and reality show content, there is no excuse anymore. And I've noticed a lot of other top-notch real estate agents and agents that simply have a passion to share and educate are also stepping to the plate in video across the different social media, including YouTube, to also share the truth of it, as are loan officers like Bill and other ones across the country. So it's important to gain insight and perspective. And I challenge you right here, right now, that if you are in the process of wanting to buy a home or do a refinance, to gain clarity, ask questions and understand that those advertised rates are fallacious unless you are 100% dialed in to that 20% to 25% down payment, FICO scores over 720, and you're cool with an adjustable rate mortgage, which in my humble opinion is usually not a very wise idea. So Bill, what are your thoughts?
First of all, Andrew, I agree with you on the adjustable rate mortgage on an ARM. There's really no benefit to it. I mean, the banks, thank God, are being smart about that, because they're not offering people just drastically lower rates for choosing ARMs, because they know human nature and people would just choose that. So if you begin to see that again, just please consider your options and what could happen if you're still stuck in that home and your rate goes up. So to get back to the main topic here, one thing that I've noticed that does happen in all the transactions that we close, my company that I work with, New American Funding, has a massive online presence. They do a phenomenal job at marketing. They truly do a great job taking care of their outside loan professionals and doing what I do as a loan officer. However, there is marketing that our consumers do receive, right? Because they're marketing to so many people. And when you're working with a lender, when you're working with a local lender, it's so important to work with someone that is not like an online type person, right? Like, I'm a local lender. I'm a local lender that can help you in Nevada. I'm a local lender that can help you in California, Arizona, a local lender not being just an online call center guy is kind of what I'm getting at. It's important to understand that when you're talking to somebody like myself, we're going off of a rate sheet, and we're going to be honest with you they should be honest with you as to what the interest rate is, how much it costs to buy it down, how much it costs to, if you want to get a credit for closing costs, maybe increasing the rate a little bit to do that. I've seen, and this has happened to me, to where I'm getting ready to close on a client, and he called me, he goes, "Hey man," he goes, "you guys have been great. You've been awesome." He goes, "I just got to ask you though, I just got this piece of mail from your company saying my rate should be this, And I said, "Oh my gosh, man, that's a phenomenal rate. That's amazing. Can you send me a screenshot of what you have there?" And he sent it to me. And again, my company that I work with is freaking awesome. They're great, but they're marketing just like every other online lender, big bank, small bank is doing. And that piece of marketing material showed, just like Andrew was showing on there, it's assuming you have a 740 plus credit score. It's assuming you're paying 2 discount points. And this was not this guy's scenario at all. Literally doing a VA loan, had a 610 credit score, and it was just a very different situation. So super important to when you're going through this process to make sure that you're not just falling for the bait, right? You're not just falling and clicking, like the clickbait on anything, but really not the clickbait on emails or marketing on Facebook and all these different things, to where you're going to click on something because something looks sexier than everybody else, right? When it comes to interest rate, because you want to read those details and see specifically what that is. If you contact someone like myself, I'm going to tell you straight up where the rates are at for your scenario, what your options are. If I recommend to lock, to float, or saying, "Hey, I'd love to close this refinance right now, but if we do this, this, and this, and this, maybe we can get your score up 15 points and save you even more money. It might make sense to do that." So just a very different type of experience working with a local lender like myself, who this is what I do, this is my job, this is what my team does, versus just chatting with someone online over instant message or whatever these clever, great things are in technology. It's always great to be able to pick up the phone or send a text.
Those are great points, Bill. I'm glad that you bring them up, because there's so much that goes into what you just said. But one of the things, just like I said, complete transparency, of course, is the way that we like to do things. So whenever we wanted to pick on, well, we're not picking on Quicken, and we're not picking on Lending Tree. We're not disrespecting their hustle. And let's not disrespect your company's hustle. So we'll just make them all as equally transparent with the way that you want to show mortgage rates. Not you, but your company, to try to compete with the other one. And that's really what it comes down to, is sexy marketing for the purpose of trying to compete. It's like when somebody says, "Andrew, I'm a first-time home buyer, and what kind of awesome programs are there out for me?" And I say, "Well, truth about being a first-time home buyer, first-time home buyer is best defined perhaps as anybody that's not owned real estate or had interest in real estate in the last 3 years. That's a first-time home buyer." So now let's start talking about why they like to call it first-time home buyer loans. I said those are down payment assistance loans, because it's like, oh, well, that means I'm going to get free money, right? Nope, not at all. Free money is never free money. It's going to cost you, and it's normally going to increase your rate, because that's how the program pays for itself. And then people seem floored all of a sudden because I shared that information with them. And sometimes they get mad at me and tell me how wrong I am and everything else. I'm like, look, I'm actually just shooting straight with you, not trying to upset you, not trying to scare you, just trying to prepare you and be transparent with you, if that's okay. But all the same, in the interest of transparency, there we go with New American Funding's rates. And then if you hit that nice little beautiful thing called View Disclosures, this screen is a little bit smaller. Let's see if I can blow it up. There we go. And it shows that the advertised loan for the 30-year fixed rate is 3% for 360 months, which is 30 years. For a $510,400 loan at 3.033% APR. Then it starts getting into the breakdown of what you would need with the interest rate quoted. Assumes a purchase rate term of a 45-day rate lock at a 60% loan to value ratio with a minimum FICO of a 740 on a primary loan. And then you can go through all of them right here, and it'll keep breaking down all these different disclosures that are available. So the real thing when it comes to lenders is something that Bill hit on a moment ago. And that's really about service, because one of the things that can be very frustrating in the real estate process is trying to, me as a real estate agent, try to reach out to the loan officer. I mean, you want to talk about a consumer getting frustrated. Well, if consumers never purchased a home before, they're trusting the professionals to do it. And if I'm trying to represent you and represent your best interest and help you make sense of real estate and get the best deal, make sure that we're compliant with all these different contingency timeframes within a purchase agreement. If I can't reach your loan officer, we have a problem. You know, if I can't know if their appraisal's been ordered, we have a problem. And, you know, that's where I get frustrated as an agent. It's like 1-800 take a number. And I've been saying that for years across different videos that I hate that feeling of 1-800 take a number. Oh, well, you know, if it doesn't work out, it doesn't work out. We'll just cancel and we'll get the earnest money deposit back. Depends on where you are in the contract, Bubba. And number two, they're already lost in that case because they would have spent the money on the home appraisal and they would have spent the money on the home inspection, and that's money they won't get back again. So that's not cool. So the best thing to do is, and that's where, you know, one of the reasons we come into that like hashtag JTAB movement with just take a breath and reassess. Let's form a game plan. Let's sit down. Let's do this right, whether it's on Zoom or whether it's on in person. Let's have the conversation that's going to be productive. And I say Zoom because it's something that I love using these days. And it's one of those things that makes it very easy for me to share my screen and show transparently the real estate process. And hey, this is what we need to do. These are your buyer disclosures, nothing hidden, nothing sneaky. And back to sexy marketing. That's generally whenever someone's like hidden fees. Maybe I can either make a video, hidden fees when buying a home. And maybe I get blown up on YouTube and Facebook because of clickbait. But I mean, interestingly enough, the more I learn about YouTube and thumbnails and stuff, realistically, it comes down to you got to get the click for people to get the value. And I'm just like, how far do you take that? As you and I talked about this, I was like, how far am I supposed to take this? I said, because you can take it to a certain point that I think you just start getting off message with the brand and off message at the transparent process. So, Bill, did you have any other considerations with that?
Yeah. So one thing I wanted to kind of mention too, Andrew, I know, I do this, but some people may not realize the importance of it. When you're talking about online lender versus local lender, even, big bank versus local lender. When it comes to being a home buyer, if you're out there shopping for homes, especially in this market right now and how crazy it's going to be between now and the end of the year, you need to do things that's going to separate yourself from the other buyers, right? Which, sorry to tell you, but just because you got a 740 credit score, you're putting 20% down, or you got a 740 or whatever it is, it doesn't matter. That's not necessarily separating you because, hey man, there's 20 other people who got the same thing you do. The thing that's going to separate you is working with true professionals. That's one of the big separating factors that you can do, because someone like Andrew doing his job and what he does, someone like myself, what I do on the lending side is that I know big banks don't do it. I know two of my biggest competitors on VA, they don't do it. I know for a fact, is they don't pick up the phone and call the listing agent. You know what I mean?
Mm-hmm.
When Andrew, when you're submitting these offers, man, I shoot an email, I pick up the phone, I call the listing agent. Half the time I know them, half the time they know me, my reputation. I'm sorry, but that pre-approval letter from USAA or Veteran, I'll just say that USAA, Veterans United, Navy Fed, all these different places, they're some of my biggest competitors. Those listing agents that get those pre-approvals, if the math is the same, sometimes maybe not even, but if the math is the same versus me picking up the phone and calling these listing agents because of the reputation that myself as a local lender has, it's going to separate yourself from the pack. It's going to separate yourself from the people that are working with Quicken or USAA, as opposed to working with someone who's a local lender, who's an actual face, who has a reputation. So that is something that I urge people to do, whether you're going to work with me or not. If you work with me, great, awesome. But if you're not, contact another local lender as opposed to using some of these online people, because your odds of increasing your ability to get an offer accepted when the math is the same is going to drastically increase by using a local lender, in my opinion.
Well, it does. In the real estate side, I don't just work with home buyers, obviously. I work with listings and sellers. And if you look at like over 175 families I've had the privilege and pleasure of working with over the last 6.5, coming up on almost 7 years now as a real estate agent, not all of those are buyers. I mean, I've done more buyers than sellers, but about maybe 100, 110 of the families I've helped are home buyers versus about, 65 sellers. But that said, as a listing agent side, then it's like, okay, when we get multiple offers into a situation, it goes right to your point, because you get these, I call them no-name entities, where I'm like, how I don't even know who this is. And I'm Googling them and trying to find them, and I don't even find a website. I was like, oh, this is a red flag. And it may be legit. But then I try to call and I'm like, where's their phone number? And then I got to contact the buyer agent. how do you know this loan officer? And it's not a way that I would prefer to build to ask a question to somebody I don't know potentially as a buyer's agent. But the point is like, how do I know that the loan officer did the DU, that direct underwrite? How do I know that loan officer verified their income, assets, credit, and employment situation prior to issuing that piece of paper, whether they want to call it a qualification, whether they want to call it approval, maybe they want to call it a conditional approval, or whatever they want to call it. My thing is the process is a process, and I need to validate that it was done correctly. And I want to see that a loan officer has the confidence in their own ability and skill to put their own mark on it and say, yeah, I did this. So back to your point, we have in times past and present had offers that were accepted whenever we worked together to be able to represent families where it was your reputation, my reputation, joint reputation together. It was the fact that you picked up the phone and called the listing agent. It was the fact that I made you available inside the purchase agreement itself with your contact information. And then, when I submit offers, I always CC you just in case the listing agent does want to reach out. I try to make it easy. So, I mean, there's some very advanced tactics on how to get offers accepted in multiple bid territory. And there's a lot of that stuff, but I won't go into that recorded content, perhaps as much as making a private group and have like our own little inner circle where you'd have to be subscribed to a whole different type of ball game to start giving away that kind of information. That's just being real. But I noticed there's a few people that have made a comment here and there, and I really just want to say thank you to everybody that's joined us, because today is a very interesting and fun day. I like to call them productive days. So, I don't believe in the thing of saying, hey, I'm busy. When people say I'm busy, I'm like, that's not a really good comment. I think what it is a better one would be, it's a productive day. Because if you're productive, you're not getting caught up in the minutia. If you get caught up in the minutia, sometimes we find ourselves doing those 80% of tasks that only drive 20% of our results, back to like the Pareto principle here, where we want 20% of what is most meaningful to drive 80% of our results, right? So it's about being productive. And back to that, and the reason I mentioned that is when we adjourn this live stream, I got to go run over to a new home builder, do a contract, and then I got to negotiate on behalf of another client, and then work on getting another family that I'll discuss with you later on into contract. And I know that you got loans to lock. But that said, I do want to say thank you to everybody that has joined us live and everybody that joins us after the live. And we'll continue doing the live streams, of course. Next Monday, just to give you a heads up, I'm doing a training course, everyone. So it's going to be a 3-day, all-day training course. So next Monday, there won't be a stream. But next Friday, depends, because we're coming up on the 4th of July too. So that might be the 4th of July. I mean, I'm happy to pop on any darn time. I'll pop on Christmas Day and say, ho, 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 let's do this, right? Maybe I get my fireworks and everything else going, for July 4th. I'm happy to hang out with you anytime. But I know that Bill and Celeste may have family moments. So anyways, without further ado, Drew's Enthused, thank you so much. He says, hello, long time. Drew's, I just want to say thank you, my friend. It was awesome whenever you did jump on the live stream with us to tell us when you close. It was so much fun and excitement having you with us. And I hope that you're enjoying a beautiful day, you and your fiance and your beautiful home. Lainey B, thank you so much for joining us. Lainey says, good morning. Good morning, Miss Lainey. Jay-Z has a really good question here. Jay-Z says, good morning. Do I have to talk to a lender if I want to transfer my house and mortgage to my son? I'm ready to retire and I want him to take over the payments and keep the house. I'm in California. Bill?
So great question. Get this one all the time. So again, every scenario is going to be different, Andrew. And Jay-Z, so when it comes to this, I assume your son may not be on title. It's kind of the way I'm hearing that is that he is not on title to the home. He doesn't currently have any ownership in it at all. You have two options. You can do the first thing, which is the cleanest thing. If he qualifies for it, you can actually sell the home to your son. You could do that. That would be a different type of transaction. You don't necessarily need to, list your home for sale and all that kind of stuff. You talk to a real estate agent or maybe another professional or maybe even an escrow officer who can help kind of prepare a couple of those things to transfer the home as far as like purchasing it, right? You're not really going to transfer it. It would just be a purchase and he would buy the home from you if he did qualify to do that. Obviously, he would still need the down payment and all that. But one thing that's pretty cool that maybe not a lot of people realize you can do if you are a parent wanting your, one of your children or family members to buy the home from you or transfer the home, you can do what's called a gift of equity. Now, that gift of equity is great because it comes from the sale of the property, and that gift of equity can just be transferred directly through escrow through closing, and we actually just closed one this last month, and it was really smooth, pretty simple to do. Still takes about 30 days from start to finish, but gifts of equity are things that do happen. Now, if you're not wanting to do that, you can add him to title. You can add him to title, pay the transfer tax to do that. And then once he is actually added onto title, you can then refinance. He can then refinance you off of the loan completely. So that way you're totally removed from the transaction. You have nothing to do with the property any longer. And in both of those instances, he does need to qualify. So if he's actually going to be on the mortgage, if he's going to have the mortgage be in his name, he's going to have to qualify for that home. Now, if he doesn't qualify on his own, you can be on there. You can still remain on the loan if you want to refinance off. He can be refinance you off the mortgage. But if he needs help to qualify, you can remain on the mortgage with him, help him qualify, and then he can then quick claim you off of title. So just he's got ownership of it. And then when his situation changes, if he doesn't need to do that and he qualifies on his own, then he can just completely take over everything.
So Jay, no, thank you, Bill. And I didn't mean to cut you off. So please continue. No,
that's all good stuff. I mean, it's everybody's situation is different. Every one of these transactions we close are very different because of family situations, because of equity, because of, maybe the children don't have the income or the credit to qualify on their own, or even be on the loan at all. So if he is going to be on the mortgage, he's got to qualify. He's got to at least have okay credit to do so.
So Jay-Z, and where I was going with this, Bill, is I'm not sure if Jay-Z was the one last Friday with Celeste was live streaming with us and Michael Ireland last Friday. But the question of gift of equity came up, and it was the first time I, as an agent, had ever heard of a gift of equity. I was like, what does a gift of equity mean? So I'm glad that it came up again, and you explained it, because it's not something that obviously I don't think that a lot of loan officers would be familiar with until they've done thousands and thousands of home loans, as you have over the last 14, 15 years as a loan officer. It's not something that I don't think comes up too much until you hit the volume of experience there. But that said, I'm glad that you bring that up, because I really want to drill down on that. I got a lot of questions about that, because I get asked that on YouTube comments where, gift of equity may have been the first time that I heard it this last week. But a lot of times people ask about transferring property from one family member to the next. And if it's a free and clear situation, it's pretty easy. You don't even need a real estate agent, frankly. You don't need a loan officer, but you do need an escrow company and maybe a real estate attorney. But at a minimum, you need an escrow company just to simply do a private party transfer through quitclaim if it's free and clear. So if you have the mortgage, that's where it gets interesting, because to my knowledge, to the point of not knowing about gift of equity, was always a situation where somebody always has to qualify for the amount of home. So if you had a $500,000 home as a parent and you wanted to let it go for like $150,000, that's your choice. There's no one's going to tell you that you have to sell your home for fair market value. If you as a parent want to just essentially transfer and say, hey, I want $150,000, but then your kid or your family member or whomever you're transferring this property to will need to qualify for that $150,000. So then the notion of this gift of equity starts getting really interesting to me, because in that case, there'd be potentially $350,000 of equity. So in my simple real estate brain, it's like, okay, if you have a home equity line of credit, how's this different where you still are going to have, if you were gifting somebody money, somebody somewhere is still paying whatever money was gifted in that case, if you're tapping into the equity, yes or no?
Not really following you on that one, dude. Sorry.
It's okay.
So
I'll have to discuss that.
So if in that scenario, so if the parents have a $500,000 home, are selling the home to their kid for $150,000, the gift of equity is obviously they're gonna have tons of equity in the house already because the parents are selling it for the lesser price, right? But the gift of equity is essentially for the down payment, right? Because a seller can always cover closing costs for a buyer, but if the kids don't have any money, or maybe the parents just want to help their kids out with their down payment, the gift of equity is actually a gift letter that is done, a normal gift letter that's done in a transaction. And if it's a 3.5% down on FHA, or it's a 3% down or 5% down conventional, or even 20% down conventional, they do a gift letter for that gift of equity for that down payment based on, in this scenario, based on the $150,000 sales price. So that's where the gift of equity comes in. It's truly a gift that goes through escrow, and it needs to be a documented family relationship. It's not going to be like, hey, my third, fourth, fifth, sixth cousin is doing this for me. No, it's got to be an actual documented, true gift that's being done through family. So I've done a bunch of them. We just closed one. Can be kind of confusing, but it does happen a lot.
Yeah, I definitely want some clarity on that moving forward, but I'm not going to keep busting it out in a live stream until you hook me up with my education, because that is a very, very interesting concept. And Jay-Z, I do want to say thank you so much for bringing up the question. I hope that does answer your question, but in any case that it may not, then please feel free to reach out to Bill Merren directly. Here's his website. It's billmerrenloans.com, phone number, email right there on the screen. Please go ahead and feel free to hit him up directly. He is also licensed in California, by the way, if you wanted the assistance in getting your family member approved for that amount and then working through the gift of equity. Obviously, Bill knows what he's doing on that. So that's really cool. So Bill, thank you. I learn something new every day. It's one thing to be like all nerdy and learning all the time, but that's why you're nerdy and learning. And in the process of making videos and doing live streams, it's one of my favorite parts are all these different questions that come up that you don't always see in practice from around the country. And I just want to say thank you to you, Bill, and also to everybody watching, because that's what keeps us sharp and that's what keeps us on our toes and keep us growing. So thank you.
Thanks, brother, man.
Nicoletta, it's always great to see you, Miss Nicoletta. I hope that you're enjoying a beautiful day, my friend. You were on my mind, you and Keegan, this morning. And I was just wondering how everything was going in your new home. So I hope everything is going well as you're making it your own, my friend. And I hope you're enjoying a wonderful start to an incredible week. Claudia says, hello, everyone. Hello, Claudia. Thank you for joining us again. Intermediary Joe says, just locked my rate today for 2.65%.
Crazy.
Hey, so Intermediary Joe, guess what? I'm not the least bit jelly. I mean, my rate's only like a 3.25. That guy over there, like named Bill Merren. I mean, I don't know what he did to my rate back in 2016, but he did get me a 2.65. I wasn't even an option. Going back to historic low rates, I was playing there, of course, but it wasn't even 3.25 back in the day was like unheard of in a way. It was the smoking low rate back then, but 2.65%, being able to do that. If you look at how much money you're saving over an amortized schedule and how much lower your monthly mortgage payments are, being your principal, interest, property tax, homeowners insurance on a monthly basis, even compared to a 3.5% rate, which is extremely low, it's insane. So, brother man, awesome. Good on ya. Super glad that you got that rate. Drew's enthused. That's a good question, Drew. So Drew says, how would the $150,000 gift of equity affect comps? It wouldn't. Not to my knowledge, it wouldn't affect real estate comps. That's not something I even review whenever I assess property value for a seller. Is like, it's really interesting. So if you look at county tax records, right, I can see where this could come up if somebody's savvy enough about the tax records themselves and transfers, because there are private party transfers that go on every day of the week. And obviously these are off MLS property transfers from family members, friends, heirs, whatever the situation may be, right? But whenever I'm assessing comps, I'm looking at the fair market value for a property, knowing that with private party transfers, they could be transferring a property for a lot more than it's realistically worth, because that's some type of family dynamic, or they could be transferring it for a lot less because, again, going to family dynamics or whatever that situation is with that specific property. So what I'm looking for are those properties and fair market value on the multiple listing service that have sold in the most recent 90 days. If I'm struggling to come up with enough data because maybe the turnover ratio is extremely low in that area, then I start looking into tax records to look and see if there was any private party transfers. And then I balance it off with the recorder's office. It's a lot of work, but balance it off with the recorder's office to see, hey, does this look like it was a traditional, like maybe a for sale by owner type situation where there's this transfer that never crossed the lines into the real estate agent threshold, but it was a legitimate transfer at fair market value. So, I mean, it takes some research and some digging, but most of the time, frankly, it's pretty easy enough to find most, especially in the last 90 days, comparables for a specific property. But I think that's a really good question. But that wouldn't affect comps on my side. What is your experience, Bill?
I don't think the appraisers will. And if they see a sale that's like drastically lower, I think it's going to be, I don't think that they're going to count that towards appraised value. And if they did, if we see an appraisal, because whenever a lender gets an appraisal, we review it, we look at it, we make sure it makes sense. And if there's a comp that's like way off, we're going to look into it too. And we're going to maybe dispute that with the appraiser and have him justify why he used that. And then it probably would end up getting pulled out. from the comps, like you were saying, Andrew.
Good stuff. Drew's enthused all the same. That's a really good question. Laney B says, love this topic specifically. Thank you for clarifying. Absolutely, Laney. And thank you so much, my friend, for joining us today. So we've been streaming for about 45 minutes. Bill, do you have any parting shots as we wind down?
No, just like I think we talked about, Andrew. I think you and I hit it on the head as far as, local lenders versus online lenders. Just, if you're absolutely just in love with your online lender and you want to work with them, just please read everything. Look at the disclosures. Truly look at those rates, because typically, again, even great companies, a little bit biased, but New American Funding, I believe, is an awesome mortgage company. Even their online presence, it's the same thing. They post some great stuff. It looks very sexy. And then when you look at the disclosures, there's points and there's minimum credit scores. So I would just caution people to, again, reach out to a local loan officer, talk to a local real estate professional, somebody who does it full time. And really get the details about what it is you're looking to do for your specific scenario. Because a lot of times people call and they just want to know rate. Well, I'm like, in order to find out the rate, you got to truly know the details of the person's scenario. So we appreciate everybody's time in talking about this topic, because we get asked it a lot, but definitely is important.
Good stuff. And I saw that Miss Celeste Harvey decided to jump on. Celeste Harvey, thank you so much for joining us. So Celeste, just a quick heads up. I'm not sure how long you might have been watching, but go back in this one, because Bill was getting deep with that gift of equity conversation. It came up today by Jay-Z, and it was an excellent conversation. And there's definitely a lot to be learned. See the Jay-Z's comment right there about the gift of equity. And that's part of what we were discussing today, Celeste. So I know it's something that you and I can learn and grow together. And Yoli White Realtor says, thanks, guys. Yoli White, thank you so much for being here. And thank you for letting us know that you're a real estate agent. I do get asked a lot of questions by other real estate agents, and it's fun. And, I got stuff in the works that are coming specifically just for real estate and lending practices soon. So you guys will be the first to know whenever it does happen. That said, thank you, Bill, as always, my friend, for joining in and giving us your lender goodness and all of that knowledge so transparently into everything today. And without further ado, we'll go ahead and wind down, and we'll see you guys back Friday whenever Celeste is with us to review rate buy downs this Friday with Celeste.
Ooh, that's a good one.
It is. So now I hope that everybody enjoys a beautiful week between now and then. And please remember that we can make the world a better place if we remember to help everybody smile. So please go out there and be the reason someone smiles today. Make it a beautiful day, and we'll talk with you soon.